Welcome to Stress-Free Investing Analysis, Personal Notes. Today we're looking at a genuinely fascinating situation unfolding right now in the Indian hospitality sector. We're dissecting ITC Hotels. This is a recently demerged luxury giant, and get this, it's currently trading around 41% below its peak. So the big question we absolutely need to answer in this explainer is pretty simple. Is this steep drop a glaring warning sign to stay away, or are we looking at a hidden gem that's offering a really rare pricing opportunity? Well, we're going to dive right into the hard data to find out.
But first, please just take a quick second to pause and read this mandatory disclaimer. It is absolutely crucial to understand that the analysis shared in this explainer is strictly for educational and informational purposes only. I'm just sharing my personal research notes here, not giving you financial advice.
All right, here's our roadmap for today. We'll start off by looking at the new independent ITC structure, check out their fortress balance sheet, dive into their moats and competitors, address those red flags in FII selling, run through some valuation scenarios, and finally, I'll give you my final verdict.
Okay, let's jump right into part one, the new independent ITC.
So they've built this brilliantly designed 6-brand strategy that actually gives them India's third largest hospitality portfolio. We're talking over 155 properties and around 14,300 keys. And they really span the entire spectrum. They've got their flagship luxury collection right at the top, boutique experiential stays like Story, and that goes all the way down to their mid-market franchises with Fortune hotels. Honestly, this gives them incredible market coverage. It completely protects them from relying on just one specific type of traveler, which is a really smart play. But hey, context is literally everything here. After being a subsidiary for 5 decades, they just demerged from ITC Limited in early 2025. So the absolutely crucial thing you need to know is that when you look at their financials and see a massive FY25 negative free cash flow of 1,403 crore rupees, you shouldn't panic. Seriously, it's just a one-time paper distortion caused by the formal transfer of hotel assets over to the new balance sheet. It's an accounting artifact, not actual operational cash burn.
Moving right along to Section 2, Fortress Balance Sheet.
ITC Hotels is operating with a pristine balance sheet. As of September 2025, they were sitting on a massive net cash position of 2,014 crore rupees. Now, in a heavily capital-intensive industry like hospitality, having this kind of war chest right out of the gate, that is a massive operational advantage.
And it gets even better. They have a debt-to-equity ratio of just 0.007. They are effectively debt-free. Because they aren't bogged down by massive, heavy interest payments, management has the full financial runway they need to hit their incredibly ambitious target of 250 hotels by the year 2031.
Just to double-check this, we ran the numbers through 3 rigorous quantitative models. A Piotrowski F-score of 7 out of 9 shows us really strong operational efficiency. Their Altman Z-score is sitting up at 22.68, which places them massively in the safe zone against any bankruptcy risk, and a Benish M-score of negative 2.30 indicates absolutely zero signs of accounting manipulation. So the big takeaway here, they have a remarkably clean bill of health.
All right, Section 3, moats and competitors.
Now, what is their actual competitive moat? Well, it isn't just luxury. It is world-leading sustainability. They have 23 LEED Platinum properties, which, by the way, is the most of any hotel chain globally. They also boast 12 LEED Zero Carbon and 8 LEED Zero Water hotels. This attracts premium corporate ESG mandates that their competitors just can't replicate overnight. Plus, they're pivoting hard to an asset-right model. Instead of buying land and building from scratch, they are signing management contracts, which generates high-margin fee income with near-zero capital. In fact, they hit their highest-ever new signings in FY26 with 33 hotels. But here's the so-what question. Why are they trading at such a discount to peers like Taj Hotels? Honestly, it all comes down to return on capital employed. Right now, ITC generates a 10.2% ROCE against a rough 12% cost of capital. Technically speaking, they are actually destroying economic value at the margin right now. On the flip side, IHCL boasts a really strong 18% ROCE. That completely explains why ITC trades at a 22x EV versus EBITDA multiple compared to IHCL's 30x. It's a 36% discount. The gap is very real, and management absolutely needs those new asset-light contracts to scale up and fix it. Which brings us to Section 4, Red Flags and FII Selling. We've got to talk about the elephant in the room. Foreign institutional investor holdings absolutely plummeted from over 25% at listing down to just 14.6% in a span of barely 12 months.
That is a massive institutional sell-off, and it's the primary reason the stock got dragged down 41% from its 52-week peak. Look, when big money leaves that fast, the price inevitably drops.
But if you dig a little deeper, you realize this drop isn't some fundamental loss of conviction. It is actually just a mechanical rebalancing. You see, when the demerger happened, index funds that held the parent company suddenly received shares of ITC Hotels. Because ITC Hotels wasn't in their specific global indices, these funds were mechanically forced to sell off those shares. This is huge, because it means the 41% drop could actually be a really rare transitional pricing opportunity, rather than a sign of a failing business.
Let's run the numbers in Section 5, Valuation Scenarios.
Looking at the scenario modeling here, we are seeing some seriously favorable asymmetry. If we hit a bear scenario, say with prolonged geopolitical headwinds, we're looking at an estimated EPS of 3.8 rupees, which gives us a 22% downside to about 120 rupees. But in our base case, assuming normal revenue growth and scaling management fees, we're looking at a 4.9 rupee EPS, offering a target of 195 rupees. That's a 27% upside. And if they manage to close that ROCE gap with Taj in our bull scenario, we're talking a 69% upside to 260 rupees. The potential reward here significantly outweighs the downside risk.
And finally, Section 6, Final Verdict.
So based on our comprehensive stress-free score, taking into account their clean accounting, their debt-free status, and those amazing sustainability moats, but balancing all of that against their currently lower return on capital, ITC Hotels lands a really solid B+ grade, scoring 73 out of 100. It is a very high-quality business that is just taking its first real steps as an independent entity. So, the final verdict? Accumulate. This is a quality compounder trading at a transitional discount. The smartest strategy here would be to build a satellite position by buying in tranches near that 140 to 165 rupee range, keeping an 18 to 24-month horizon in mind. We are essentially just waiting for that forced FII selling to end and for those high-margin management fees to pull their ROCE up above their cost of capital.
Before we wrap up, a quick but important disclaimer. The analysis shared in this video is for educational and informational purposes only. I am not a SEBI-registered research analyst or investment advisor. Investing in the stock market involves significant risks. The data and charts shown are based on public information and my personal research notes. Please do not treat this as a buy or sell recommendation. Always conduct your own due diligence or consult with a SEBI-registered professional before making any financial decisions. If you found this deep dive helpful and want to stay updated with more stress-free investing analysis, please hit the subscribe button and press the bell icon so you never miss an update. I want to hear from you. Which Indian-listed company should I analyze next? Drop the stock name in the comments below, and it might be the subject of my next explainer. Thank you for watching, and keep your investing stress-free investing. So I'll leave you with this one final thought. With its totally debt-free fortress and a massive pivot to an asset-light model, will ITC Hotels finally become the true crown jewel of Indian hospitality? Or will that pesky ROCE gap keep it forever standing in the shadow of the Taj? I guess the next 18 months will tell us for sure.